You're watching the program that identifies market trends, provides insightful analysis, and reliable research. Key elements to help you profit from the pros. Profit from the Pros is brought to you by Zacks Investment Research. Learn more by visiting them online at zacks.com. Welcome to Profit from the Pros. I'm Terry Ruffalo. Investor focus this week went between rising hope for the U.S. economy to concern over disappointing European economic data. And in between, the Fed came out with stronger language on what they could do to bolster the economy if conditions warrant. Financial stocks were on the decline, technology stocks, and some select blue chips were also in focus during the week. Gold set all kinds of new record highs, and the National Bureau of Economics, those folks who date recessions, said that our recession, which began in December of 2007, officially ended in June of last year, the longest recession of the post-World War II period. Let's bring in Shiraz Mian now, Research Director, to kind of kick around what's going on out there in the markets a little bit more with us. You actually say the market is at an inflection point. What do you mean by that?
A very simple definition of the inflection point, Terry, would be that the market is moving from one trend line to another one.
Okay.
So what I mean to say by that is that all this while since the April high, the market's been fixated on a number of macro issues, these big picture issues like what's happening with the U.S. economy. Are we going to go into a deflationary spiral? What's happening with Europe? And whenever a situation like this happens, then stock prices tend to move in sync with each other. So this thing called correlation increases, and it makes stock picking extremely difficult. So that's been a very tough period for stock pickers, and my sense is that all of those macro issues are now receding in the background. We are seeing some evidence of that in the September rally as well, and this should give stock pickers an opportunity to come in and pick good winning stocks.
You know, the financials don't seem to be moving in sync, though, as a group with the rest of the stock market.
That's right.
They're not participating in the September rally. Does that concern you?
It does. My sense was that the Basel III standards that came out a couple of weeks back would remove some of the uncertainty and clarify the capital picture for these guys, and they should start moving up. But we have more clarity, but we don't have enough certainty as yet. So the capital picture is improving, but we still don't really know how the too big to fail issue will be handled in the long run. And remember, the dividends were heavily cut for the financials in the downturn, and the clarifying picture on the capital side is expected to improve the visibility as to when the dividends and the financials will come back. And we are not really seeing that as yet. So as that visibility on that front, when they will start paying dividends improves, I would expect the financials to participate as well.
All right, you bring up a couple of good points. You mentioned dividends. There are a few companies raising their dividends. Announcements of that came this week, as a matter of fact. And a lot of stocks making some new 52-week highs here. So all of that goes into making this a stock picker's market that you said a moment ago. And if that's the case, share with us some weekend wisdom on what investors actually can do to pick winning stocks.
Yes, the skill is becoming critical now, as I mentioned, the market being at an inflection point. And I would just highlight three main attributes of winning stocks, though the list is quite long. Number one is earnings. Number two is the quality of the stock, and number three is valuation. Earnings, briefly on this key attribute, is the mother milk of stocks. So but earnings need to be growing, and earnings need to be growing more than what's the market expecting for this particular stock. So if a stock is moving, is expected to earn 15% more, for example, in Q3, and it could come out ahead of those expectations, that's a good attribute. So any way an investor could size up and handicap stocks that could come ahead of earnings expectations is an excellent tool for picking winning stocks. The same with quality. Quality could come across as very subjective, but it's the quality of management, it's the quality of service, it's the quality of the products they have, the quality of their balance sheet, and there's nothing subjective about these attributes. Investors could very easily determine those quality metrics. And number third, valuation. Look at relative valuation metrics like price to earnings, price to book. Compare the stock to its peers, compare it to how these metrics have been in the past, and that should help investors picking good quality stocks. And I think that's a skill that will pay off in the coming days.
So what you're actually talking about is finding companies that have stocks, companies themselves though having compelling fundamental stories.
Exactly. In the period over the last 8 to 9 months, the stocks, as I mentioned, were moving in sync with each other. So these positive fundamental individual stock attributes were not getting the appreciation as they should be. And my sense is that going forward, this will be a more important variable for picking stocks.
Okay, we're going to see you all through the show here, so you don't go anywhere. Don't you go anywhere either, because there is more still ahead, like the Bull and Bear and Stock Talk. Stay with us. Here is your Bull and Bear Stock of the Week. An electric parts distributor and a supermarket chain are this week's Bull and Bear of the Week. Shiraz Mian back with me once again to elaborate on these two stocks. In the bull category, we have Avnet, AVT, the ticker symbol. What makes this a bull?
Two main reasons, Terry. This is a $4 billion market cap electric parts distributor, as you mentioned. Mm-hmm. The primary reason is that they instituted a number of restructuring measures during the downturn, and that has put them well positioned to benefit now that the business has come up. And secondly, in major chunks of the market, particularly in Asia and Europe, this segment of the market is fairly dispersed, non-consolidated, and Avnet remains well positioned relative to its peers to participate in that consolidation drive, and that will be its growth momentum. So just briefly on their business, this distribution business is not exactly a high-margin business, high fixed cost. They have to build these huge warehouses, and they have to employ huge amounts of capital in inventories. Their gross margins are controlled by their customers, like IBM, for example, like Sun Micro, and then they onward sell these components and inventory parts to original equipment manufacturers and other contract manufacturers. So what they did when the downturn came was that they squeezed a lot of cost from their inventory and from the operations of their warehouses, which was tough on their estimates and their profitability during the downturn. But now that the end market, these contract manufacturing, the demand from those is improving, the outlook, the margin outlook for Avnet has significantly improved, and that's really showing up in the estimates for this company. Semiconductors is a major end market for them, computer components, and some near-term headwinds, but the long-term outlook has significantly improved for them.
All right, the supermarket chain is Safeway, SWY. That is the Bear of the Week. What's going wrong with this company?
Well, they instituted a very good strategy during the good time up to 2008 when they implemented this policy to redesign and reposition their stores, which they call as the lifestyle stores. And that was very good when the times was good, but as the economy went south, that has put them in a tough spot. And their expectation that consumers will be buying more and they will be trading up, that hasn't really come through in the downturn. Consumers have been very cost conscious, and they have been gravitating to more discounters and some of the peers that have better price points for groceries and other purchases compared to them. The lifestyle store is an awesome concept. It's very good. It's more formatted to local tastes. Has Starbucks in there. Has more variety of perishable items. But the flip side of that is that it makes the merchandise more expensive. And in the downturn, as we all know, with the consumer stressed out, with the unemployment rate where it is, that has prompted folks to not move as much towards Safeway as they do towards others. So the comps have been weak, and that's showing up in their estimates.
Okay, we're going to leave it there. Stock Talk is next. You won't want to miss it. It's an interesting one. Stay with us. More still to come. And now, Stock Talk, analysis of stocks in the news. FedEx Corporation recently reported earnings that were just slightly shy of analyst expectations. They also reported net income up more than 110%. But then they said they were cutting 1,700 full-time employees. Now, the significance of that part of the announcement is that FedEx is viewed largely as an economic bellwether. Here to take a closer look at the stock with us are equity strategists Tracy Reinick and Michael Vodicka. Let's start with the fundamental side of this picture. Do we have anything to worry about here?
No, not really. It's interesting because FedEx, as you said, is a bellwether, and this report actually showed what is going on in the global economy. Their international revenue is their strong segment. That's the air, and that was up 24%. They're seeing this big surge in shipments from Asia. They just added 2 more flights. They're actually getting their planes out of the desert to meet demand. All the electronics that are being shipped across and the iPads and all that stuff, they're not putting those on boats. They're getting them on the planes, and they will into the holiday season. So that's the strong end. Now, this area where they're actually cutting the jobs and consolidating is on FedEx Freight, which I didn't even really know they did. That's like shipping refrigerators and things like that from manufacturers to U.S. domestic retailers. And there's a lot of competition in that area. There's a lot of extra trucks. They can't raise prices, so they're going to cut that so that the whole industry can actually raise prices and get rid of some of that excess supply. So you can see the domestic side a little bit slower on those big ticket items. Their actual FedEx Ground is doing quite well. That's going to you and me, like packages to you and me via trucks.
New guidance from analysts fell a little short of estimates. Does that concern you?
Not too bad, because I think they were having these good quarter-over-quarter numbers, and people were very optimistic. And they did raise guidance for the full year, but again, it was a little bit shy of what people thought. But I don't think that's really a concern here.
Still, overall, the community of analysts reaffirmed their buy on FedEx. So I guess nothing really concerning there.
Right.
Mike, does the momentum picture confirm the fundamental side?
Tracy's painting more of an optimistic, bullish picture, but taking a look at the chart, we are seeing a little bit of uncertainty in the chart. Tracy made a good point. It's definitely a bellwether. This is a 2-year chart of the S&P 500 versus FedEx, and they basically trade lock and step with each other for the last couple of years.
Okay.
Moving to a more on the shorter term basis, Federal Express kind of looks like the overall market. It's trading within a fairly narrow range between $77 and $87, and eventually it's going to have to break out. It's looking for a direction to go.
So you're seeing some choppiness in the current trade.
I'm seeing some uncertainty here, definitely. Yeah, I feel like the stock is searching for direction, and until some more economic data comes down the line, it's probably going to stay range bound, just like the market.
One analyst actually came out on the wire earlier this week and said that he saw the stock reaching $104 within a year. Do you see anything there that might indicate that?
Well, Tracy would know more about the estimates than I would, but basically we'd really have to see a nice pop in earnings. We'd have to see an acceleration probably on the international side and also the domestic side, but it's going to take a fairly significant push for us to break 100. We're at about $84 right now.
And they're on a fiscal year, and so they just reported fiscal first quarter earnings.
That's right.
Which is what we alluded to. Do you see $104 in a year on the fundamental side?
I don't know. I mean, their CEO did come out and say things are still growing, but they're growing slower now. So what does that mean? But this is what we're seeing in the overall economy in general.
So this is a statement on the economy.
Oh, yeah.
Basically. All right, we're going to leave it right there. Thank you guys for digging into this one for us. This is one we'll have to keep our eyes on. Stay with us. Roundtable time coming up. You won't want to miss it. Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, the recession's officially over, or is it? But the September rally just keeps on going, like the Energizer Bunny. Here to talk about all of that and more at this edition of the Roundtable is Research Director Shiraz Mian and equity strategists Bill Wilton and Tracy Reinick. And we've even had them trade seats this week to just confuse you a little bit more. But Tracy, I'm going to start with you. There was kind of a dearth of economic news out this week, not enough really to move stocks. But the economic news that did come out kind of underscored the slow pace of the recovery.
That's right.
And so, but we got the official word that the recession's over.
Right.
That was back on Monday. Now, through the week, then we saw people saying, well, like Timothy Geithner, maybe not. Maybe it's not really over. Warren Buffett took the Yogi Berra approach. It ain't over till it's over,
right,
till the damage is corrected. What do you think?
Well, we continue to get these mixed signals. We are off the bottom, which is what Buffett said. He said the Berkshire units are off the bottom. They're growing slowly, but they're not anywhere near what they were before the recession started. And so he's using that as a gauge. And then you have, normal, everyday people in the economy who are also using that as a gauge. They're seeing what they were before. They're not anywhere close to that, so they still see us as being in the recession. But you have these other indicators like the metals like copper, that's at a 5-month high,
gold
and it continues to surge.
And highs and everything.
And you don't get, copper doesn't stay at these levels unless there's real demand or something going on underneath. Mm-hmm. So it's an interesting economy and the stock market right now.
So, Bill, that safe haven trade is really not off the table yet, so it wouldn't seem to confirm an official end to the recession. This is more of a technical definition, is that right?
Well, what we're seeing is just people obviously flowing into gold because stocks have been dead for 10 years. There's really no way around that. So, people are just flowing into something that actually has the tangible value. We've seen, through the financial rally, before the recession, there were all these complex derivatives, almost like this money was coming from nowhere. So people are opting for something that has a tangible value to it. So that's why we're seeing a big influx in gold. There's also other factors like ETFs that make it very easy for individuals to get into gold. But it's just a very interesting economy right now. It's something that most people have never even seen in their entire life. So,
what do you think, Shiraz? This is a technical definition that the recession's over more than anything else, right?
It is. The primary definition that the folks at the National Bureau of Economic Research go by is negative economic growth for 2 consecutive quarters, and that's what essentially they're coming out and certifying that period ended in the 2009 summer. Now, in terms of how it feels to folks, to businesses, to consumers, it feels very much like a recession. We have 10% unemployment, almost 18% underemployment. So all of those
I was going to
folks...
say, there's good reason for that. You got 15 million people out of work.
That's right.
Prices still rising.
That's right. So technically, the economy is growing, producing positive numbers. We've been seeing that since last year, the third quarter of last year. So we have even the second quarter when the numbers was very low, it was still positive. In Q3, even when there is a slowdown, it's going to be a positive number. So the economy is producing positive GDP number. Mm-hmm. And it may not be showing in people's pocketbooks and in terms of jobs, but in technical economic jargon, it's a growing economy.
Well, then what good is it if it doesn't reflect it in your pocketbook? I mean, come on. I noticed, Tracy, that even the Bureau that he referred to, the folks who put the official dates on these things, updated their FAQ section on their website to reflect questions like how do you define a depression and, double dip, what's a double dip recession and all of that. So maybe they're not even too sure about it. I don't know. But what are we here looking at this September rally for? I mean, how did this all get started and why is it going so long?
I don't know. This is the weirdest market I've seen in a long, long time. I mean, you have people buying this Microsoft debt. They just issued the $6 billion worth of debt for under 1%. I don't know why they're buying that. They could have just bought the stock and get like a 2% dividend. And then you have people flowing into the glamour stocks. Mm-hmm. You have Amazon and stocks like Priceline trading at like nearly 60 times earnings. That makes no sense to me. And then, the volumes have been low. So why are we rallying? Nobody's interested that we're up, 8, 9, 10% this month.
Companies raising dividends.
Right.
McDonald's
and apparently
just this week.
Nobody's into that. They're still buying treasuries. They're still taking money out of equity mutual funds, going into the treasuries. I don't know. It makes no sense.
Yeah, is it time maybe for money to come back out of bonds and into stocks now?
I'll beg to disagree with Tracy's characterization. I think it makes a lot of sense. From April onwards, there was this fear that the economy was going back into another recession. We were seeing all the major economic indicators pointing in that: manufacturing, services, labor, consumer. Now, over the last month and a half to 2 months, we are seeing a reversal in that. So we see that manufacturing is maybe not going into as much of a tailspin as folks were expecting. The labor market is not as good as folks would want, but it's still improving. So that's improving sentiment that yes, the economy is slowing down, but we are not getting into a recession. Is basically driving the September rally.
Okay, well, now that you piped up like that, give us your top stock pick of the week, would you?
Patterson UTI. It's a land driller. The drilling scene on the offshore is very bad because of the BP episode in the Gulf of Mexico. But on the land side, things are humming and very good. And Patterson is one of the biggest drillers out there. It's more natural gas centric. The U.S. has that shale natural gas, and Patterson is a major play on the development of the U.S. shale natural gas. So I have Patterson UTI.
All right, Bill, quickly.
LDK Solar. What they do is they make the wafers that go into solar panels. One thing I really like about solar right now is that they're actually being driven by increasing demand. About a year ago, we saw a lot of speculation, but DuPont came out earlier this week and said they're expecting $1 billion in solar sales, just reflecting that type of demand that's out there. So we're seeing excellent growth rates and valuations in solar right now.
All right, Tracy, even quicker.
I had 51 Job, which is a Chinese online recruitment. They are in 25 cities, and the job market over there is a lot better than over here, so they're seeing record revenues.
I should have known it would have been a Chinese.
I know.
Anybody going to see Wall Street this week?
I am, probably, yeah.
Yeah?
So maybe I'll give a review.
Yeah, maybe, when we come back.
Yeah.
It's just what I want to see, a movie about people losing their jobs all over again. Thank you for being with us, and we'll see you next time here on Profit from the Pros.